Hey guys, Money with Yumi here, where I talk about anything and everything related to money and how to grow your wealth. In this video, I want to share with you 10 stocks that have fallen drastically from their 52-week highs, which ones I'm interested in buying, which ones I've bought, and what I'm doing in this volatile market. And guys, everything in the stock market is down, right? And the market is super risk off right now. It is really mind-blowing to see stocks hitting their 52-week lows or near their 52-week lows. Like one week it's up 20% and then the next is down 30%, that sort of thing. It's fun to watch, but you need to have the right mindset going into it. Otherwise, you're going to get emotionally affected, right? So this video is going to be split into two parts. The first 5 stocks are going to be stocks that are about like $100 and above, and the 6 to 10 stock, which is going to be in the next video, are going to be stocks that are under $15. So the first one on the list is Netflix. Netflix stock crashed 35% in a single day due to shocking loss of subscribers, weak growth, and tough competition. Netflix soared during the Coconut pandemic to a high of $700.99 because people were stuck at home and Netflix was their source of entertainment. But with everything opening up, people are starting to go out to the Broadway, musical, cinema, etc. And I do not own any Netflix stock because I've always felt that they had a very high valuation. But looking at the PE ratio now, it's finally at fair market value at about 20. But the thing that's stopping me from buying Netflix is because of competition from other streaming services like Amazon Prime, HBO Max, Hulu, and Disney+. 2022 is the first year where Netflix lost subscribers in the past 10 years. And Netflix is predicting a loss of 2 million subscribers for the next quarter. That's a lot. And Disney Plus is going to be Netflix's main competitor as they announced that they're going to increase their content budget for streaming to $33 billion this year, which is almost double of what Netflix spent in 2021, which was $17.7 billion. If you're interested in Netflix, you have to think about it in the long term. Like, sure, they're going to have more competition from companies like Amazon Prime and Disney Plus, but is everyone going to stop using or watching Netflix completely? Probably not. As long as they can keep coming up with new content that's exclusive to Netflix, then the majority of people aren't going away. They may have peaked in terms of subscribers in the US, but think about the untapped potential overseas. Right? For example, they're pumping more money into Korea and making original Korean content. Another issue I have with Netflix is that they're not profitable yet, although they might finally be positive this year or next year. We shall see. And this is one stock I'm watching but not buying yet, and I do not own any shares. If it drops below $150, then I'll be interested. The second on the list is PayPal. PayPal is one of my favorite fintechs out there, and one of its founding members is Peter Thiel, and then Elon Musk joined in later on, and the rest is history, right? I've been using PayPal since my secondary school days when I was selling things on eBay, although they only went public in 2015 after they decided to go their separate ways with eBay. And this is probably the world's most used online payment system with over 426 million users worldwide. They're definitely trading at a discount right now, especially if you believe in PayPal for the long run. They're getting into the crypto space, letting US customers hold and make purchases in crypto. And they're also partnering up with Amazon, well, not PayPal itself directly, but its subsidiary Venmo, which I also use. Not to mention, they're also tapping into the buy now, pay later option, which have been offered by many other companies. And the main reason why PayPal stock crashed is because PayPal expects its growth of net active users to slow. So Wall Street started selling off the stock, and then you mix that in with fears of inflation, interest rates rising, and Wall Street expecting people to not spend as much this year, especially if the US were to fall into a recession. So PayPal went from a high of $310.16 to $72 here today. That's almost a negative 400% in just 10 months. And with a P ratio of 24, I personally bought some at around $80. And even if it drops below 70, I'll just keep buying. And honestly, I hope it drops below 70 because then I can build up my position and lower my cost basis, because the more a strong company like PayPal crashes, the higher it's going to bounce back. So this is easy money, guys. And another intriguing stock is Square stock, and they own Cash App, and one of their main competitors is PayPal, obviously. I see Square being used mostly by small businesses and restaurants, but I feel like that technology is easily replicated, which it already has been. So I would prefer to buy PayPal stock over Square if I can only choose one. And the third on the list is Meta, also known as Facebook. Let's take a look at this. Look at this drop. Like, it's crazy how the price is lower than it was in 2020. I feel like Meta is such a misunderstood company with all the bad press affecting it throughout the years. People think like, oh, it's just Facebook, Instagram, WhatsApp, like what's the big deal? Like, yeah, they own social media, but it's the advertising that brings in a shit ton of money for them. Even though the new Apple iOS update affected Facebook's ability to target ads to their users, since iOS users can now choose to opt out of targeted ads, and the PE ratio here today is one of the lowest I've seen in Meta's history. 13 plus compared to an industry average of 40. It's a freaking joke if you ask me. They have such a strong balance sheet and their cash flow is still growing, not to mention strong fundamentals. They've also been buying back shares recently, which most companies do when they feel like their share price is undervalued and will go up in the next few months or even years. And Mark Zuckerberg is so focused on the metaverse right now that I wouldn't be surprised if he actually dominates that industry in the future. Meta also owns Oculus, a company that makes virtual reality products. Honestly, their biggest competitor isn't Twitter or Snapchat, but it is TikTok right now. And one of the things that Meta does really well is replicating what works for other top apps and then doing something similar in one of their apps. And we saw that with Snapchat filters. I feel that Instagram is kind of copying what TikTok has and then slowly integrating it into Instagram, like with the introduction of Instagram Reels. And I've mentioned this throughout my channel many times that Meta is like my index fund play. Every time it drops, I'll just buy. And I have no intention of selling any of my shares in the short term because I feel like this is another easy money play in my list. The fourth stock on the list is Shopify. A lot of influencers and small businesses use Shopify to sell their stuff online. It is easy to set up and you don't need coding knowledge, so it allows companies to connect with customers on a global scale without needing to build their own website. And Shopify was a hot stock during the Coconut pandemic. It went from 300 something to a high of $1,762.92, and now it's back down to 300 something dollars. Shopify's management said year-over-year revenue growth to be lower in the first quarter of 2022 and highest in the fourth quarter of 2022. So this might have triggered the sell-off, especially when they did not expect the Coconut pandemic to add so much acceleration to their growth, and they expect slower growth rates moving forward as everything goes back to normal. In the last 2 years, Shopify's revenue has grown 86% and 57% respectively, and analysts expect them to grow 48.5% next year. Shopify also partnered with JD.com, one of China's largest e-commerce platforms if you're not familiar. So this will allow vendors to set up shop on JD's platforms using Shopify. Their PE ratio is much lower now at about 200, even though that's still kind of high, which makes the risk reward more attractive. I have bought and sold the stock before, so now I'm interested in buying again as long as this stock stays below $400 in the $300 range. The fifth stock on the list to buy is Alibaba, and Alibaba crashed to its new 52-week lows at $73.28 because of news that Charlie Munger has cut Alibaba shares by 50%. It could be because the U.S. Holding Foreign Companies Accountable Act, HFCAA, gives U.S.-listed Chinese stocks 3 years to comply with disclosure requirements, or risk being delisted. And a lot of people are turned off with Alibaba stock right now because it is a Chinese company, and China has pretty much been isolated from the rest of the world with how they're handling the pandemic, right? Trying to be COVID-free. And if you remember, Alibaba stock first crashed because the Chinese government imposed regulations, which resulted in Alibaba paying a fine of $2.8 billion, and there were also fears of them getting delisted. But recently, the Chinese government is starting to allow Chinese companies listed in the US to provide audit information to US regulators. You have to understand that the sell-off is not because of the company's fundamentals. If you look at the numbers they're putting up, they're still a very strong company. China e-commerce industry is still going to keep growing. They have over 1.31 billion active users across the Alibaba ecosystem and ripped in $38 billion in revenue in 2021, though Alibaba said it would not provide a forecast for the current fiscal year because COVID-19 risks clouded its outlook. after reporting its slowest quarterly revenue growth since going public in 2014. And in the long term, this should work out in my favor, or maybe I'm just one of the few people who is really optimistic about China's growth, although they have problems of their own to solve. Right now it's trading at a P ratio of about 30, so that's extremely attractive to me. So under $100, I'll buy, just not go all in, you know? So these are the first 5 stocks that I'll buy that's about $100 and above. Watch my next video for the next 5 stocks that are under $15. And don't forget to hit the like button, subscribe to my channel, and ring the bell icon so you get notified whenever I post a new video. And thank you for watching part 1. I'll see you guys in part 2. Bye.